Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Everyone's back in their stations today, so we're looking forward to having a nice, peaceful, stress-free rest of the week. On today's show, we have two guests for you. We got Kyle Dennis at 8:15. He is a trader and a co-founder of the site biotechbreakouts.com. And then it's Tuesday, so that means at 8:35 we're chatting with Nick Shaheen, our options expert and the author of Create Income with Option Spreads. In the meantime, we got a couple earnings trickling in. We got some ratings, and we're going to talk about what we think is the disaster stock of the day. First, Joel, how are we doing in the S&Ps this morning?
Hanging in there, up 2 points. Quiet range overnight, 22.06, your pre-market high. Not much up until you get to the 21 or 22.11 and a quarter. That was your all-time high close. Monday's high at 09.50. On the downside, holding Monday's low, 98 and a quarter. Monday's low at 98.75. That's key to any downside in the market. Looking at the crude oil market, a deal, no deal. It looks like no deal today. Crude trading down $1.34 after a big rally yesterday. 45.63, that stands as your low, a dime above it. The low from yesterday and your 6-day low right at the 45.15 area. And gold and silver both in the red here. Gold within $10 of its low of the move. I believe it got to 11.70 and change on Friday. But that's to take a look at the S&Ps. Dennis, how was your trip to South Bend, Indiana?
Oh, it was great. The students out there are great. If any of them are listening, hello. It was, did we just talk market structure with Robert Battalio's class there? Talked a little bit of high frequency trading, talked statistical arbitrage, talked different strategies. Very good class. The kids are very, they're very into it there. So it was nice to speak with the class there. So
How
it
big?
was fun.
How big
The
of a
one
class?
downside is when I obviously go out and speak in Notre Dame, I'm not trading there. So I was off the grid yesterday, so you got to inform me, Joel, what was going on yesterday. Tell me, because when you're off the grid for one day, it's funny as a trader, you can really lose your feel. So I'm struggling here this morning trying to look at what happened yesterday and trying to get the feel back here, and sometimes that can take a day or two.
We had a major correction yesterday in the market, Dennis. The S&Ps were down almost 9 handles.
Is that allowed? Are they allowed to go down 9
I
handles, or is the Fed going to step in?
Yeah, I think Fed's going to come in and buy S&Ps if they break 2,200. No, we talk about the rotation, and yeah, they were selling the financials, but they were buying the Google. Apple had a decent day, even though it's in the red today. Just moving money around, really nothing big. As far as the S&Ps go, potential another double bottom here in 21.98 and a quarter, 21.98.75. But kind of a quiet day, only a 12-point range, 10-day average range about 12 points. So maybe just have another 1, 2, 3 days of consolidation and another move higher.
Just looking at my charts from yesterday, and I was going through obviously some of the stocks and some of the sectors that have really been hot since Trump. You had a red candle, a big one there in U.S. Steel yesterday. You also had a red candle in Nucor. And then if you look at the other steel stocks, they were a red candle here as well. So a little bit of profit taking, it looked like yesterday there in some of the sectors that were strong. The banks as well, which have been very strong since Trump got in. Bank of America fell 50 cents there yesterday, so that was a big red candle for that too. But just hopping back over to the steel, we're seeing follow through here this morning. You can see U.S. Steel's trading down another 3% here in the pre-market. Nucor is down another 2%. AKS is trading down 3% in the pre-market, and that has a lot to do with we had some analyst ratings in the sector. We got Argus downgrading U.S. Steel here this morning. I believe you were saying Macquarie also was commenting in the steel stocks?
Oh, yeah. Macquarie downgraded everyone and their brother in the steel sector here. I believe they gave downgrades to AK Steel, Macquarie, Steel Dynamics, the whole shebang here. So, we make fun of analysts a lot, right? And we, like the day after a stock drops 20%, they come out and downgrade it. But here, you really can't argue with the logic. If you want to do a downgrade, these stocks have had tremendous runs. I'll just do the technicals here. In U.S. Steel losing a stick today. Pre-market low. Let's give you the pre-market low, just under $31. So I think this would be a tough one to fade. I mean, these stocks have had incredible runs and could
Big
see,
time.
yeah, a lot of gaps to fill. You had one, two, three gaps to fill in there. You know me, when I see a lot of gaps down there, I expect them to be filled or come close to be filled. I mean, no matter what Trump does, I mean, can this have that much of an immediate impact on the next quarter earnings for U.S. Steel?
No, no, and I think it's longer term, people are thinking, but the market becomes irrational and it overshoots all the time. And is this an overshoot from US Steel when it runs from $17 to $33 a matter of 2 weeks? I think so. I think there's going to be some correction in here. So that's why it's hard to jump in. Do you think the analysts like at Macquarie they are looking at the charts though? Because it's funny they come out with the downgrade today or last night. And that was right the day after the first red candle that we've really had, the first big red candle. There was a couple little ones in there, but do you think they look at the charts?
I do. I do. I mean, how can you, be an analyst on a stock? I mean, you don't have to be, a full blown technician, but man, if you had, let's say you got your clients in here before the election, I mean, that's what the research is for, right? To talk to your clients, to talk to your customers, to sell to the institutions. Man, if you pulled a call out like this when the thing was under $20 here before the election, and you get it, I mean, how could you, why not be a hero? I mean, how much more could you expect, than the rally that it's already had?
And look at this stock, just putting in perspective, started the year. US Steel has to be one of the best stocks this year. Back in the first week here, the stock was $8. That's where it started 2016. So when you're looking to look at the strongest stocks for 2016, US Steel's got to be right at the top of that list. 6, 12. How many percent is that? I can't even do the air math, and that's too much, Joel. It's like
400%.
400%.
Yeah, 400%. Let's call it, 500% over 30.
Yeah, well,
Yeah.
I mean, it may just keep going. Who knows? But I think that first ugly candle here makes a lot of people nervous. And now I think if you do get a pop, I think there's people ready to take
Oh,
profits in this. Yeah.
Dennis, come on, for sure. I mean, now you're going to have a gap on the downside here. Boom, boom. You got a gap to fill. Let's see if we can fill this gap today between 28.98 and 29.49. That's one gap you need to fill. So, I don't know. Maybe 29.49 might be a little bit much today. Or no, actually 28.98. $29 might be a little bit out of the question today, but we'll see. You get a down day. People are going to be selling into weakness. You get some more downgrades tomorrow. We'll see what happens. I mean, you figure just a retracement here from that pre-election low 16 to how high did we get? $33, over 33, almost 34. That's 18. That's 9. You go down to the 20. I mean, you could still go into the 26, $27 area and still
Not even
argue
at the 50%.
not even be at 50%.
Yeah, so there is some air both on the upside and the downside. Let's jump back over to those financials because we know they've had some ridiculous runs here too. Bank of America has went from just under $17, actually about 16 and a half when Trump got in. Ran all the way up to big hole number $20.87. Kind of put a double top in there yesterday, 2087, 2085, and then the ugly red candle here. Now we get a little bit of a lift here this morning. The S&Ps are trading higher. I think profit takers could come in here in this sector here again this morning. So I'm looking at the Bank of America rally, and it's not much of a rally, only a nickel, but rally is a nickel a dime here at the open. I think I might be fading the rally.
Yeah, maybe I get up near that 2050 range. Sellers will step down off that double top yesterday in Bank America. I mean, big run once again, and it's interesting. On Friday, I wasn't active in the markets here, but they certainly, the buyers certainly took the opportunity, to run it up there on lighter volume. Of 30, only traded 60 million on the shortened day, so got that close up on Friday. Couldn't even get to that 2086, 21. Big level looming above for Bank America.
Goldman Sachs really didn't have much of a red candle yesterday. It's trying to hold on. You have multiple analyst action here in Goldman Sachs here this morning too. Just going to the trusty Benzinga Pro to grab that analyst action. They had GS got downgraded at Namura to neutral from buy, but at Keefe Bruyette they actually upgraded the stock from market perform to outperform. So looking at that, Goldman Sachs is actually trading down it's trading up 10 cents here in the pre-market, 209.80. It is ex-dividend here today, so when you look at your platform, you could say, well, close at 210.35, it's trading down. Now it's 65 cents, so it's ex-dividend, which makes me more bearish it because you have some people, I don't know how much they, go and jump into Goldman Sachs to do dividend capture here, but there may be a couple people in there. So I don't know. I think, this thing starts taking out yesterday's low. I think there's a lot of air below. I think this is set up here in the financials to the short side. This is the first time since Trump we can actually look at the financials and say they're starting to set up a little bit from the short side.
Yeah, they certainly are. I would keep an eye on the 209 and a quarter 30 area. I see a low on the 21st at 0918. You got the 0960 yesterday, 0937. So that's your area. Bearing down on that right now. Below that, look out 205 maybe here in Goldman Sachs. Do not see much until 205.67, November 17th low.
Look at this Wells Fargo chart. It really had the incredible run from 44 all the way up to the overshoot up at 54, rallying 10 points in basically 5 trading sessions. On a stock that had their, been significantly underwater because of everything that happened with the fake accounts. Everybody forgot about that quickly. Then you had a week and a half here of consolidation digesting that ridiculous up move. And it looks to me like it might want to try to resolve a little bit here to the downside now. Yesterday's candle, very ugly in Wells Fargo. It's up a little bit here in the pre-market, but I think sellers are going to lurk here, and I wouldn't be surprised if we take out yesterday's low on this one as well.
And below that, $51. You had a low back a few days ago. It just looks like just about 51 even, or a tad below. Actually, that low was 51.99. That was backed up by a 52.02 low. Another man, let's call 51.90. Or excuse me, we're below that right now, right? 51.60 close, 51.31, 50.96. Your November 16th low.
Okay, one earning stock here to jump into just before we get our first guest. Tiffany's, TIF, is trading up significantly in the pre-market. Spencer has the numbers.
76 cents is their Q3 EPS, revenue of $949 versus $927 million. So, nice beat on the revenue.
Stock is popping here, so you're looking at Tiffany's. Don't call it a comeback, but I'll call it a comeback because everybody hated this in the summer. Tiffany's went down to $56 back on July the 1st. And now we're looking at up here at 82, and you can start thinking about it. We're still a ways away from the all-time high here, but it looked like in the summer that was not even going to be possible. I shouldn't say all-time high, the yearly high, because the all-time high is actually much higher than that. We actually got up to 105, but we put a lot of tops in 2015 up in the 95 area. That's a ways, 82 here, but stock is slowly been trying to make a comeback.
Yeah, blew away that, not blow it away. November 11th high, 81.89. We're trading 30 cents above that. As long as we hold that, I think you got room for continued upside. Above that, man, you haven't traded up near this area. 84.19. That was your high on back in November. Boy, if it gets up to 84.19, Dennis, I say it won't get to 84.19 today.
No, I don't think so either. I think, and just looking here at some of the other retail stocks, and obviously, Coach is one you want to look at that, but it had an ugly candle yesterday. A lot of your retailers were weak yesterday, too.
Yeah.
I'm still getting my feel back here because I was off the grid, but as I bring up more charts, I get more feel. And there was some ugly candles in the retailers, too. Kohl's has been down for 2 days in a row here after a pretty good run. JWN had a really ugly candle yesterday. Nordstrom, and I'm not saying Tiffany's the same, but they're all retail stocks. So sometimes they all kind of group together here. Now you get a pop, in Tiffany's. There could be some people taking profits onto this. So I'm not sure this is going to be one that just explodes to the upside. We have seen some stocks have the gap and go earnings. I don't know if this is going to be the case in this one here this morning. But tell us about the pre-market action, Tiffany's. How high did it get?
Pre-market high in Tiffany's above $83, Dennis. I would not going to go out on a limb and say the high is in, but 83 and a quarter is your pre-market high. And it's funny, those retailers were selling off after some blockbuster Black Friday numbers. All right, we are going to take our first break of the day. We got a trader on, a biotech trader, Kyle Dennis, co-founder of biotechbreakouts.com. Quick break. We'll be right back with Kyle.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Connon, along with Dennis Dick and Spencer Israel. We have a new guest on the line, and that's Kyle Dennis. He is the trader, co-founder of biotechbreakouts.com. Kyle, how you doing on this Tuesday morning?
I'm doing very well. How about you?
We're doing well. So, a recent graduate, I guess, here of UCLA in 2012 with a degree in biology. So,
That's right.
how come you didn't end up being a doctor, like your mama said?
Well, that was my intentions when I first went to school, but just when I graduated, I figured I was doing pretty well at the stock market thing. I started trading my senior year in college, and I just really enjoyed it. So I just stuck with this, and I have a few family members who are doctors, but I felt like this was for me.
All right, so tell us how you got involved while you were in college. Was it doing some swing trading, some options trading? How did you get attracted to the biotech market?
Yeah, I just knew that I wanted to have some financial freedom, and at some point I was going to have to start doing some trading, and I naturally just picked the biotech market because I thought, hey, maybe I'll have a little bit of an edge because I'm a biology major. And I kind of got a bit lucky because, as you guys know, in 2012 and 13, the biotech market was really taking off. And so that's what I stuck with. And I found that using some catalyst events or some data might be coming out, you could really trade around those and make quite a bit of money without taking on too much risk. So that was my strategy going forward ever since I graduated.
Okay, so fundamentals really I come into play. We'll go into your technical analysis later, but just walk us through your day, your week, what information you're looking at to make your trading decisions. I mean, it's a lot of this is just just the luck of the trials and everything. Tell us a little bit about your fundamental research.
Okay, so there's not too much fundamentals in terms of earnings and things like that, but what there is a pipeline of drugs out there, and you can search for the dates that are coming up where these trial releases come out, these phase 1, 2, or 3 datas, and you can go online and search for those dates and then trade ahead of them. And basically, I've found that a lot of times coming up to these dates, the stock can really trend up higher, and you can take advantage of that and then not hold through the particular event. And that way you could reduce your risk, but also maximize your return and find new trades every day by just finding these dates before the actual data comes out.
So how far ahead do you start looking at the price action of a stock? Let's say, is it a week? Is it 2 weeks? How far out? Do you start looking at it a month ahead of time? When do you start digging into the stocks?
I usually like to find them 2 months in advance, and then I'll kind of plan my trade and then trade the stock about a month before the event, leading up to that event. So, for example, right now we're getting into the start of December, so I like to watch some stocks that are going to have data at the end of the year or at the beginning of January. That way, that really helps me plan my trades in advance, and also gives enough time for a run-up.
Could you walk us through a couple of those examples?
Sure. So a stock that I have been watching and I own right now is called Medgenics. The ticker there is MDGN.
Okay.
And Medgenics has some data, ADHD data, coming out at the end of this year, likely in the last week of December. So I picked up this stock at 450, and you can see that it's been trading up pretty nicely along with the biotech market over the last few weeks. And I expect it to go up a bit more over the next 2-3 weeks ahead of that data release. So that's pretty much my strategy. And then another one I'm watching that I don't own yet is AGRX. That's a stock that has phase 3 data coming out in early January of next year. So I tend to think that one's going to have a run up pretty soon over the next few weeks into that data as well. And that one has yet to run, so I'm scouting that one out for a trade.
Let's go back. What was the symbol on the first one? MDGN? Is that what you gave? Yeah, Medgenics. So did you pick it up on? Yeah, Medgenics. Did you pick that up? I see the 450. Did you pick that up? I see it like came down to 450, looked like it was going to hold, and then you had to spike to $4. Then you came back above it. Just, looking at your technical analysis style, did you pick it up on the way down? Or, man, because if you bought it going back up through 450, boy, it was a heatless trade. Just trying to get a feel for your technical style.
Yeah, I bought it on the way up. This was kind of a unique situation because, as you guys know that I've been following the biotech industry, when on the run up to the election, the biotech index was really getting hit. So a lot of the names I was watching, regardless if they had catalyst events coming up, were really going down, and that was mostly because, excuse me, that was mostly because Hillary Clinton was a little bit negative on the sector.
Correct.
And when Trump got elected, people are a lot more optimistic. So we've seen a lot of V-shaped action in even just small cap biotech. So I typically would have liked to average in before the election, but I didn't hold through because I was nervous what was going to happen, like a lot of people out there. So I waited and I picked it up on the way back up.
Now, I noticed these last couple stocks were under $10. Do you like to pay attention to the lower price stocks, or do you just go where the fundamentals are?
For catalyst events, I really do like to watch the lower price stocks, and that's because, one, you can have better percentage gains that way, and two, a lot of these lower price stocks have a limited pipeline of drugs. So the data that comes out really can affect those types of companies versus something, say, like Pfizer or an AstraZeneca or even a larger cap or a larger price biotech. A lot of times those ones are very hard to trade around because their pipeline of drugs are larger, and the data that comes out might not swing the stock as much as, say, something that's $5 and only has 1 or 2 drugs in the pipeline. It just means more to the company. So those are always the ones that you see go from, 5 to 20, or conversely 20 down to 5. Those low price names. That's why I like to find those, because those can be most volatile.
All right, Michelle K. out of the chat wants to know if you have done any research or OPHT is on your radar, Ophtotech Corporation.
Yeah, that's actually a really interesting name because it's been beaten up from 60 down to where it is now, down to about $34 a share. And that's because Regerion, REGN, had some negative data with a drug that's kind of similar to OPHT, what they have. And so traders and investors are speculating that OPHT is going to have bad data. I don't necessarily know that's the case. I tend to be more positive on the name, but they have that data coming out in December, and this data is going to really swing the stock. It's going to either be, in my opinion, a $15 stock, or it's going to be close to $100. It's really important glaucoma data, and if it is positive, it's going to be transformative for this company. So this is one where if you're going to hold through this data, it's going to be very volatile, but you can be rewarded.
All
That's
right.
pretty big if you're right.
You have caught our chat's attention. Phil Chen wants to know about ESPR.
ESPR. Honestly, I don't know too much about ESPR. I can tell you what dates they have coming up there. Looks like they have phase 3 FSP studies to be initiated in the 4th quarter, but data is not due till 2018. So other than that, I'm not too sure about this.
Phil, this needs to close above $12. You got someone making a stand there. All right, we have Matt in the chat, and this is a little bit of bigger stock that's had a lot of volatility here. AGN, Allergen.
AGN. I don't know too much about that one either. I don't follow
Okay.
a lot of the large cap stocks.
Okay.
I just follow mostly small.
Yep, okay. I kind of got that feeling there. And then I'll just ask, it's probably a little bit of a bigger one. I know this is not might be in your wheelhouse. ENDP here, Endo International PLC.
Endo International. Let me check out the chart.
Okay.
This one's really been beaten up. I know they have a pipeline of pain drugs, and let me check out their Endo Pharma. I know they have a pipeline of pain drugs, and they're partnered with a couple of other stocks that I'm watching. One being BDSI, but the FDA has been pretty harsh on all these pain drugs because of addiction problems, and so I've kind of stayed away from this company, and it's fallen quite a bit from. I think it was a high. It's been in the 50s earlier this year.
Okay.
But other than that, I'm not too sure on the name either.
All right, let's go two more. They're lower price ones. If you don't have anything on it, that's fine too. EGLT.
EGLT. That's an interesting name on the subject of pain medications. Well, this one had an FDA approval date. It got an advisory committee, which is a meeting that the FDA brings in experts to talk about whether a drug should be approved or not. And it got a really good vote. I think it was 14-1. So everyone here is expecting it to get approval, but the FDA asked for more time, likely to discuss labeling issues for their pain drug, which I tend to think at the end of the day it's going to get approved, but the FDA might give it an unfavorable labeling because of the problems they've been having with addiction and pain drugs. So I expect this one to get approved in December and trade higher, at least off that approval press release.
Hi, Kyle. Dennis Dick. I've just been listening in the background, but I just got a question for you because you were looking up the dates there, and where are you looking up those dates for those biotech events? Like, how do you find out those dates? Because that's a useful tool.
Sure. There's a website called biofarmcatalyst.com, and they have a lot of the dates on there, and it's all free. And then all you have to do is go over there, and you can kind of check out which small caps are going to have some dates coming out. The guys, he does it all for free, and he puts a lot of the transformative dates on there, not stuff really for big companies, say Allergan or Pfizer. But you can go over there and just check it out. And then also, if you're interested on my site, I give a lot of my personal commentary on there on biotech breakouts. So I use some of the dates, and then I give my own thoughts and commentary on the names.
All right, before we let you go, let's go with your top pick for the remainder of 2016 and perhaps a sleeper for 2017.
Sure. I like this company called Invitae. The ticker there is NVTA. And what's interesting about this one is they don't have much data coming out per se, but they're involved with genetic testing. And that has really gotten, it's a really good trend going forward, because what you can do is send your DNA to a facility and they'll analyze it for you and tell you what problems you're going to have in the future. And nowadays it only costs $700, and it's being covered by insurance now. And going forward, that's going to really be positive for not only patients, but for insurance companies. And some of my favorite biotech hedge funds, like the Baker Brothers, have a big position in this name. And I think that over the course of the next 6 months, it can be a double.
All right, Dan, for 2017, give us one a little bit longer term.
2017. I like a company called Halo, Halo. And that's because they have a pipeline of drugs that's already producing revenue. So that's nice fundamentally for the longer term. But they also have some transformative drugs, one being PEG, which is for pancreatic cancer. And they're going to have some data coming out in early 2017. If they find success in that, I think this stock can be a multi-bagger, and over the course of 1 to 2 years can be a buyout candidate, especially with all their big-time partnerships they have with a lot of the big cap pharma names.
I can't calm this chat down. This is your final question here. Do you track clinical trial databases too?
I do. That's because the clinical trial databases can give you some insight into how the trial is constructed, which can give you some good thoughts on if data is going to be good or if data is going to be bad. It's pretty technical, so if you're not familiar with how trials work and all that, it's going to look very confusing. But given some time in the industry, you can really go in there to the clinical trials database and gain some good information on stocks that have data coming up.
Kyle Dennis, trader, co-founder of biotechbreakouts.com. Great information, Kyle. We'll talk to you again soon.
Great. Thank you. You guys take care.
All right, little GDP data here. I saw it flash by my screen. Not much movement in the S&P. Still up $1.50 at 22.02 1/4. How you doing?
Quiet
there?
session.
Yeah, what's going on? You sleeping over there?
No, I was listening. That was a great interview there. So that that was, good information that we were getting out there, obviously, and the dates, it's one thing, if you're trading any of these, you should know those dates because all of a sudden, there's a trial or there's something coming up, you're going to see funny action happening in those stocks. So biotechs are always tricky to trade technically because they can have random events that happen too, but the ones that have the dates there, so that's a great site. So I'm going to write that one down that he gave us there. What was it again? It's in the chat there. Just so the listeners can hear it again.
Biofarmcatalyst.com.
Biofarmcatalyst.com, yeah. So that's the place to check the dates. So good information.
All right, on this slow Tuesday morning, Dennis, how the imbalance is looking?
Slow. Coca-Cola 45,000 sell, Bank of America 100. So okay, just jumping out here, I do see the financials a little bit weak, which is interesting because a lot of them trading higher. Bank of America 136,000 to sell, Citigroup 81,000 to sell. That's significant. Wells Fargo 51,000 to sell, J.P. Morgan 35,000 to sell. This could be a little bit of institutional action that's following through from yesterday, saying ugly red candle yesterday. I'm going to lighten up, and I think that's what you're seeing here this morning with those sell imbalances in those stocks. Majority of the market actually has sell imbalances, but they're small. So obviously, one, trader coming in here could change all that. But a couple in the pharmaceuticals, I'm seeing pharma a little bit stronger here this morning. Pfizer's trading up 30 cents. It did catch an upgrade from Barclays here this morning. It's got a buy and balance of 23,000. Also seeing Lilly trade up just slightly. Had a little bit of a down day yesterday after obviously, earlier or last week they're having the washout day. So Lilly a little bit weak there again. Seeing oil trade weak here once again. ExxonMobil, we've obviously got oil trading down significantly. So that's putting some pressure on ExxonMobil, Chevron, ConocoPhillips. All three of those stocks trading down almost 1% each. So looks like oil's going to be weaker. Looks like financials are starting okay, but I think that they might start to give it back. And I wouldn't be surprised if some of these defensive names continue to show out performance here. Quietly, Joel, you let me know, and this has been kind of quiet. AT&T, after everybody hated it after Trump, has been up for 9 days in a row.
Oh, yeah, that's an incredible streak here. 36 to 39 and change. I want to see what I have it trading up 17 cents in the pre-market.
40's got to be, 40's right?
Gotta be. You got to think 40 on the mind here. And, boy, I don't know. There's a little gap to fill. You had 5-6 highs around the 39.50, 39.60 area. We'll be keeping an eye on this one maybe for a couple inside days and see which way the consolidation will resume. All right. You want to bring Nick in on the fly here since we took a break here? Nick, I hope you're on your toes here. Nick Shaheen, he's an option expert, author, Create Income with Option Spreads. We gave him last Tuesday off with pay. He is back today.
Thank you. I appreciate it.
But he's back. He's back. Nick, what's going on? How was your vacation?
Vacation was good. Travels were great.
Where'd you go? Where'd you go?
Went to Georgia.
Georgia? What are you doing in Georgia?
I
Yeah,
have
you
family.
go from California to Georgia. You call it a vacation?
Well, if you saw where the house is, it's definitely a vacation.
Oh
It's
yeah,
out,
nice.
it's secluded. It's I have family that moved out of California temporarily for a job, so went and visited them there. So it was nice and relaxing. Traveled off, we traveled on the weekend before the holiday and came back on Friday just after. So we didn't get stuck in the madness of travel. So that was a little smart. So yeah, nothing too exciting, just family time like it's supposed to be around this time of year.
When you're out there on vacation, are you still watching the markets? Are you still, in the corner, are you having a little family time, then go to the bathroom, make some trades? How's that work there, Nicky?
It worked great. I had the basement set up for a small station, and this way I can
Oh,
just
you set up house.
I disappear for a little bit. Yeah, I even borrowed a couple monitors from them to hook up and extend that. Because I took a Surface, a Microsoft Surface, and it worked great, except the monitors
Oh,
are not that big.
Microsoft lover. Why Surface, not the iPad?
iPad doesn't have Excel or Word or anything like that.
Oh, so
Surface
you
is a
like
full blown laptop hidden
so
in
you
a
like the
tablet.
Surface.
I got one.
I don't like the price, but I do like it. Yeah.
Yeah, I got one. I mean, my shoulders get tired though. With that little keyboard, typing on there. But Nick, let's move into the broad market here.
So yesterday I heard you say something a little about that this morning. You made fun of it, but they waited on the media. So let's say CNBC, and they waited in the morning when it was a little red, and then they tried to pop, and then they went redder, and then just finally afternoon, Pisani goes out and calling tops. And I sent out a note saying, okay, so we got Pisani calling tops. By tomorrow morning, we'll have Kramer calling the bottom of this quote correction, which you guys labeled as correction. Yeah. So it's like I didn't think it was legal for the IWM to go red anymore ever.
I know.
So
How
so
many days was it up in a row?
I think it's like 14 or 15. I mean, it
Is
was
that
up.
a record?
If it no, it was up before the elections. So after the elections, just rallied on up.
14 days in a row?
Something like that. So it's an incredible.
That's
So
unbelievable.
but for the last couple of weeks, what I've been saying is that yes, when we had the little swoon in the general markets as we were talking about, I said, okay, I see buyer exhaustion, and I said it on your show before, but I put in big bold letters, the market is still dangerously bullish, and literally this week, the way I'm saying it, I'm saying the same thing, only in different. I'm saying we are one headline away from a big move, up or down, believe it or not. So you can't have big conviction in anything. You do all the homework you want, one headline is going to ruin it for you. So it's homework is again hostage to headline. And speaking of headline, the biggest one here in front of us, we have two or three coming down the line. The first one is OPEC. Then you get the jobs number on Friday. Then you have the referendum and the Fed. And we don't know what's going to happen with any of these headlines. But let's tackle the first one, which was OPEC. And yesterday, I believe that the market misread the rhetoric. To me, it sounded like Saudi Arabia is willing to go wage another price war, except this one, it's against OPEC members. They're willing to let the price drop in order to bring Iran and Iraq back to the table for a negotiation about cutting. Because if these two are not going to cut, Saudi Arabia is not going to cut because it's going to lose market share to its maybe enemy, one would consider Iran. So that's not going to happen anytime soon. And markets bought 2.5% up oil, and they're giving it back today. At least they were last time I looked at the screen.
The thing to me is, they talk about these cuts, but even if they say they're going to cut, they're not going to actually cut it. They're just going to keep pumping and pumping and pumping and get as much out. So, I mean, this oil market, I mean, it's, you just got to pay it. You talk about headline exposure, that's in the oil market. So, what are you looking for? I mean, you talked about the catalyst events. Are there any technical numbers basis the S&Ps or the Russell that you're looking at could be key to some potential downside?
Well, potential downside is there, and it's not no more evident than in the small caps. If you look at the chart of the small caps, it's just parabolic, up and away. So that makes it vulnerable to a drop, like yesterday's candle. If one wasn't waiting for a headline, could say, "Oh, this is the start of a correction," and you can't argue against that. But you can't bank on it either because they've been irrationally bullish, recklessly bullish. They're expecting. It's like Tesla. at 290 and people willing to buy it up at 290, you're pricing in perfection and then some. So here, the Trumpian trade is they're pricing perfection of 4% and higher in growth. Well, let him start delivering one thing before you price everything in. So even the Dallas Fed yesterday, it was like, what? The numbers, the flip. So everybody is on board that it's going to be perfect from here on out. So every headline that's not so perfect will chip away at this conviction, and then it's going to give away to some sort of a correction. But you can't bank on it. So buying puts, just strictly buying puts, is difficult, to say the least. I mean, they're going. Look at the transports. You can't just buy puts and wait. You're going to have to do something a little smarter than that.
Nick, let's just talk strategy for a bit. And obviously, you do a lot of, option writing here. How often do you actually buy options? Is this like 10% of your action, or is it, less than that, or is it more than that? Talk
It's
about, when you would actually go out and buy puts as opposed to write calls.
okay. So I buy when I have to. So
Okay.
if I am short long term, and in order to defend my short, I buy calls overnight, and I book them if I have any profits in them. So I buy calls or defense or debit call spreads in order to continue to have some conviction in my my longer term thesis that fundamentally we haven't seen much improvement. We've seen the promise of a lot of improvements, but the promises have been so vague that you can't just bank on it. Show me something. How are we going to get there? Then I'll get on board. And I flip bullish to +4 or 5% growth in the U.S. Until then, the thesis continues to be the same. So I don't know if I can put a percentage on it. 10%, I guess, is just because I want to. But I've dabbled into trying to get puts in. And if I want to buy puts right now, I'll probably do it in the calendar or a diagonal, meaning if I want to short the market in December, I'll buy a put for December at whatever level I want, and then I'll sell puts against it shorter term in order to lower my entry price. So what I need there, so if I wanted to short the IWM, for example, and I buy the 130 put, I can sell the 130 put for this week if it brings me anything, while I wait, because if I know it's not going to close below 130 this week, then the money I collected from selling the put will go towards lowering my entry price in the longer one. So that's how I build a position that's bearish. If I'm bullish, I'll do the opposite. But it's hard to pick a level where they can't reach, right? So I still see support in the market, but I also see a lot of resistance. So that's why I say it's almost a coin flip, and it's just one headline away from a breakout again, up or down. And if I look at particular names, I mean, the market itself is hard to pin, but the fundamentals in particular names are easier to pin. So, for example, when everything took off, we had the reflation trade, so they call it. They dumped megatech, and great names like Google and Apple and Facebook got hammered. Then I know conviction that, okay, there's a bottom to these drops. So if you wanted to sell credit put spreads against them, that was the right thing to do for medium term. And that's what I did. But then again, to defend my longer dated shorts, I would buy debit call spreads to protect me overnight.
All right, Nick, out of the chat from Rob Hood, any thoughts on the chart pattern in AEE? And I'll tell you, for the utility power company, this thing really moves around some big ranges over the last couple days. Held up quite well compared to some of these other utility stocks. Looks like major resistance at 52 to me. What do you have for us in AEE?
AEE or AWE?
AEE.
Okay, because there is an AWE. So this is Amarin. It looks like technically it has upside potential because they've rallied up to a level to which they failed, but now the rally took shorter to get there. So if they can break through that resistance you noted, and I agree with you that it's a failure level of 1, 2, 3 times at least. They broke through it one time in 2016, say around June, but they come back to it. So if they can break through it, they might be able to revisit the highs, but it is a prior failure level. So I don't know the fundamentals of it. If they pay a dividend, it looks like they do, and if it's significant, then they're fighting the higher rates too, because it's an alternative, right? You can either put in the bank or buy it stock that gives you dividends. So it's a tricky trade, and not knowing the fundamentals. I'd say technically it has potential, but maybe it needs to prove that it can take out at least 40 or 50 before I can get on board that.
All right, Don33 must like your content. He wants to know if you've ever published a book.
I have not. I've written snippets here and there. I published enough to be in a book, but not one time. I wrote a book when I was younger, and it was like a thriller type of a deal, and it took so much coordination. I don't know how they do it for a living, to keep track of the plot and everybody involved in the plot. So no, I have not had time, but maybe later in life I would. I enjoy writing a lot, so
And
I don't
Don,
mind.
you don't mind? Well, Don33, he says, could you recommend one? And I guess it would be
No.
for the options market, unless you want to give us a thriller or something that you've read
No,
lately.
the best book in the options market is just follow threads. If you read something interesting to you, follow it and make sure it raises a question and hunt the answer to that question. And you'll write your own book by learning bits and pieces. Just make sure you qualify what you're reading and put your spin on it. And that's how I learn. I have never bought a book to learn something. I've asked questions to get the answers, and the answers will give me more questions, and that's how I follow it, one step at a time.
You know what the problem with books, and I'm going to say the same thing, is I don't read a lot of trading books because I feel like the stuff that's published out there is often old strategies that don't work anymore. Because if you've got something that's really working well for you, it's difficult to just go and write it all up and then share that because it's going to crowd your strategy out. That's even like we're on this show. We always talk about capital intensive strategies a little more for that reason. I talk about the big caps. I talk about, Bank of America stuff that, if I'm trading it, other people, isn't going to affect it nearly as much. But when you start getting, talking to intricate little strategies, or you start talking to smaller stocks, it can affect it. And, and I don't like to talk my book either, but I just feel like a lot of stuff in the books is like the same stuff as well. Like you get 100 million technical analysis books, and I mean, really, is there that many different technical analysis?
I totally second that. So what interests you? If it's options, stick to options. If you want to learn a strategy, learn it and really learn it to see how you can modify it to suit your taste. So if you just heard me say about a calendar, you can find that maybe you start fiddling around with it yourself and you find, hey, wait a minute, but I can turn it into a diagonal, which is just similar, only you move one of the legs up or down, depends on your risk tolerance, to make it work better for you. So somebody offers you something, look into it and find out all that you can about it, as opposed to reading. There are hundreds and thousands of ways you can use options. So if that's what interests you, if you're talking about technicals, the technicals don't really change a lot because it's they're scientific somewhat because they're based on numbers. And there's a site called the Pattern Site. I think it has probably the best technical analysis out there if you really want to learn it.
Talk about your technical analysis, because we talk to you about options all the time. Tell us, you do some great charting and stuff. What is your basic? Give us in the next 2 minutes, your basic, technical analysis.
I subscribe to the crayon analysis. So I take the technicals.
That was from our Mackie, wasn't it? Remember Purple Crayon? He used to say on
Right.
CNBC. I think that's the best thing CNBC ever. Jeff Mackie with the purple crayon. That thing worked.
I know. I mean, it works because it makes you zoom out and not be so, if I see, 51.48, I'm in. If it's 47, nope, I'm not. Hey. So for me, the technicals, I found a few indicators that I totally understand and I totally see repeating and totally see viable and work for me. And I look for those. And then I get so good at it, look for them so often that I look at the chart and immediately they pop out. Whereas I'm not good at doing bats and crabs, although I can replicate them. But if I look at a chart, that's not what I see. So for somebody who's a technical analyst, like you've had Peter on the show before, he's as strong a technical analyst as I know. He can draw these probably in his dreams, and he subscribes to all the ABC patterns and all of that. It's a little beyond my pay grade. For me, if I see a head and shoulder, inverse head and shoulder, cup and handle, inverse cup and handle, it all makes sense. It makes intuitive sense. I can put it in plain, simple English to tell you, to explain it. Therefore, those are the ones I use. I look at relative strength. I look at MACD, the moving average, conversion, divergence, just because they do make sense logically. But drawing expansive, very accurate lines from point A to point B and tell you it's going to get there, that's beyond my scope. And I don't need it in the way I trade because I don't troll the charts for trades. I use the technicals as a consultant to set my fundamentally based trades.
We've been on the line with Nick Shaheen. He joins us almost every Tuesday to discuss the options market, create income with option spread. Great information, Nick. We'll be talking to you again next Tuesday.
Great to be back. Thank you.
Thanks, Nick.
All right, S&Ps have gone red here. Just a tick here. We got up to 2206, and we have backed off here. Unchanged on the day. Apple.
Oil.
Yeah,
Oil.
oil.
It's ugly here. This is, what's going to bring us. We're down now 4% on the USO here. It's trading at $10. This is a shellacking here this morning. ExxonMobil's trading down over $1 now. Chevron is trading down well over $1 here now too. ConocoPhillips, the big guns are all down big time here, and that is probably what's starting to weigh on this overall market. Talk about the oil technicals here just for a second. Like break it down, zoom out. Like Nick was just talking about. Zoom out. Let's really analyze it here because let's look at the last year of oil trading. And I'm just going, I haven't even brought up the chart here yet, but we start the year, and then all of a sudden, we really, got hit earlier, and then we come back, and we get up over 50, and people have hope for it again. Now we're sitting here mid 40s. What are your thoughts here technically on oil?
All right, Dennis. Well, first of all, I just want to say that I've been doing the technicals for a while here on crude, and it's just so OPEC and rumor driven. You could do the technicals and you can look at it, but these guys come out and say things and then reverse their tracks. But let's just look at it from the perspective, when we went to 2605 here. This is a rolling front month contract. And you got to rally, but you know what? However you want to stack it up, $50 ended that rally. Sure, you got 1 month, you got into the almost 54. Then a couple months ago, you got into the 52.74 handle. That was actually in October here, but for the most part, it has not been able to spend a lot of time over $50. So let's call 26 to practically 54. Boom, that's a 18-point move. Tack on 9 to that. To me, unless you can really get some strong fundamentals going, I see this thing drifting back under $40. It just doesn't seem to be, you talk about product. Now Goldman expects OPEC to read production cuts and then you'll rally, but just don't think the fundamentals are there for this to, be a long-term hold above $50.
If oil starts drifting back, and this is just scenario analysis, we're not saying, it is or it isn't, but if it goes back to $40 here, do you think this is going to start to spook the market? Could oil be the next thing to start actually bringing the market back down to earth? Because I know we've taken off on Trump and, we think everything's going to be great here again. But oil was the thing that brought down the market last year, late 2015, early 2016. Everybody was talking about oil every single day here. And we have just been in this quiet consolidation for the better part of 8 months, really between, say, 44 and 54. We start going down to 40 here again, and we're at 45 here today. Do you think that actually starts to spook the market?
Most definitely. And the reason that I say that is, remember when we were trading at 26, 38, 30, 32, the big concern in the market was the bank's exposure, to some of these, companies that, had debt out. And boom, 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 rally, the oil rallies over $50. No one talks about that anymore, right? No exposure. Crude is, it's coming back. And gets up over $50, and they start just opening up the spigots here. So most definitely, all this euphoria in the financial that's been related to Trump coming in, the financial regulations. If things go sour in the oil patch here, that could have a major effect on your bank stocks, which pretty much been leading the charge here. So I do agree. If it can hang in here between 40 and 50, I think really concerns those psychological levels. 40, you break below that, but right now just stuck in the middle of the range and rumor driven.
I mean, look at this Halliburton chart. Larry was just talking about in the chat. I just brought up HAL, stock that I trade a lot. This is classic head and shoulders that really, just from the last 7 to 8 days that Nick is talking about here. You had the left shoulder there for 3 4 days, just under 50. You took out the 50. Everybody gets excited for breakout, but then it put in a double top. Now you have the right shoulder just forming, and now you get another breakdown here a day today after a breakdown day there yesterday. I mean, that's starting to look like a little bit of a toppy formation there. ExxonMobil has been in the quietest consolidation ever, $87, 86.47 yesterday. The close down another dollar here today, but it has struggled. It really didn't even participate in the last rally. It couldn't get up over $88. So there's been some runs though in some of these stocks, and Chevron's been one that's run up quite a bit here in the last couple of weeks. So I wouldn't be surprised if there would be some profit takers out here if they're concerned that oil could start going back down.
Good old CVX here. I'm looking. This is kind of charts I'd like to see. I mean, I'm sure we're trading down here a stick 40 in the pre-market,
Yeah.
but I was just gonna say, man, look at all those lows. If this gets back up into the 110 handle today, I see the 109.10, three lows at the 110.20 area. I could be looking at this from a potential short play, especially after the big run up and the consolidation. Also, Dennis, keep in mind that the oil stocks, even though ExxonMobil has slipped to number 3 in the top 10 components, if you look at the top 20, 30 components in the S&Ps, you're going to find more than one oil company in there too. So it's a big, big component of the overall S&P 500 index, no matter what those financials do. Dennis, we are trading up one tick here at 2201, holding on to that magical 2200 number. Give us a final look at imbalances and what's going to be on your radar for today.
They're slowly starting to grow, like we were saying, a little bit more to the south side, which is why I think you're starting to see some weakness start to pour into the S&P, as a lot of these stocks, if they do stick with these sell imbalances, are probably going to open down. What's interesting here, I'm looking, the banks, showing some sell imbalances, but they're showing some strength in the pre-market. So, what I was saying before, the banks were looking weak from an imbalance standpoint. They're not really looking weak, though, on the trading standpoint here. So, starting to see a little separation. Actually, the banks are starting to lift a little bit. So, even in the last 20 minutes where we're starting to look like the banks might start to roll over again, they're actually starting to show some strength. And instead, you're seeing the utilities roll over here. XLU is trading down now 0.7% here. So that's, a little bit of, a concern. AT&T and Verizon trade like utilities. AT&T is trading up here right now in the pre-market, but we already talked about it's coming into major resistance here at 40. And I wouldn't be surprised if AT&T rally stalls out here. 9 days in a row seems overdone to me now too. So, the trend they always say is your friend, but trends do end, and they sometimes end up big hole numbers. And I think if AT&T challenges that 40 today, I might be playing it from the short side.
858. We are going to wrap up today's show. Dennis, you're back. You sound healthy. Great to
Well, a little bit under the weather still, but
Yeah.
the colds seem to never go away. I'm not bad. I'm getting better, though. Getting better.
All right, I'm buying the Dennis calls here. All right, Spencer, you want to preview Wednesday's show?
Yep, and we did have that Iran won't cut oil production as a headline about 5 minutes ago. Thanks for listening, everyone, today. If you missed any part of our show, you can catch the whole thing again on iTunes, SoundCloud, Stitcher, or YouTube. Just go to any of Benzinga's channels or just search for Pre-Market Prep there. Please always remember that all material and content from our show is for informational purposes only and not meant to be investing advice. If you want a free 2-week trial of Benzinga Pro, you can call us up at 313-723-2000 or head to pro.benzinga.com. On tomorrow's show, we've got Tommy Lackey on the line, as he is every Wednesday. So looking forward to having Tommy on. The show wasn't quite able to chat with him last week. It's been 2 weeks since Tommy. I'm looking forward to that. Thanks for listening, everyone. Hope everyone has had a good morning so far. Hope you have a good rest of your pre-market and a good trading day. And we'll be back with you guys tomorrow morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.